Hey everyone, it's Missy again from Tax 29 Warren. Here again with Andy. We are going to do our answers with Andy again today, this Friday. It's actually a rainy day, and a lot of people come to us with questions and might have a rainy situation in their life. And this one people often do is ask how taking out of their 401k or other retirement plan might impact their taxes. So, and if there are any other ways out of the tax implications that might come from it, what might those be? So, Andy, what say you?
Well, I wouldn't want to consider the 401k or an IRA rainy day money. This is money that's supposed to be set aside for retirement. It's supposed to be long-term savings, and that's where you get the tax advantages. Obviously, life happens, expenses come up, and people want to tap into it. There's going to be regular taxation on a traditional IRA or a 401k, but not only that, there's also a 10% penalty. So as if the regular tax isn't high enough, they tack on an extra 10% penalty. There's almost no way out of the tax. There's a few ways out of the 10% penalty when distributions are taken out of that. If you receive it for a death benefit, if you receive it as a disability, or if you're disabled, you can get out of the 10% penalty. There is a item where you can take out for a first-time home purchase up to $10,000. However, that money has to be withdrawn from an IRA, not a 401k. If you pull the money out of a 401k, you're going to have to pay the penalty and the income tax. If you're at the 15% bracket, that means instead of 15%, you're going to pay 25%. So if you want a down payment on a house, $10,000, you can pull it out, but you got to make sure you roll it over to an IRA before you do that, and then you can avoid that 10% penalty.
So a lot going on. It is what it is if you have to do it, right?
It is what it is, yeah.
All right.
Ideally, there are options for those who are working in the company that their 401k is where they're currently working. They can get a loan on their 401k. This would be a much better option. Then you pay it back yourself. There's dangers to that. If you end up leaving the job or lose your job, you're going to have to pay it all back then, or recognize it as if you had taken it out at that time. That can be pretty painful when you come to do your taxes as well.
Right. Okay. Well, thanks, Andy, for your answer.
Thank you.
And so everybody hear that? If you can try not to take it out of your retirement, don't.
Grab
Anything else, anywhere else?
That's a
last option.
Last money to take.
All right. Well, thank you. That's Answers with Andy, and have a great weekend. Bye.